thank you for being there. And today is another of those sessions, a grueling 2-hour session, and basically we are going to talk about material, labor, and overhead, if possible. So let me as usual, present you with you the material which I have prepared for you this session, and I go along and talk. So if you and as usual, you can directly join my classroom and get the materials right after the class is over, along with the boardwalk if I do anything, and of course the disclaimer about the issue that nothing what I do is really speaking, only the perspectives are mine. So basically speaking, I am just helping you with the perspectives. So nothing is mine really, that for that matter. So the contents are already there in your study material or some other books or the course institute material. So this is the syllabus, and if you look that I have cut across those issues which I have already talked about. Well, I understand that it is very difficult to be thorough about the whole subject in this short time, because this is basically a 6-month course, this whole material. So naturally, I'm just helping you through the issues. So, and naturally, I'm here to get your questions as and when you ask me those. So actually today, look, we would be talking about Unit 3, maybe first 1 hour 20 minutes, and Unit 4. So these are the two issues we talk about. So in this material which I have for you, it's a very I have tried to be a little detail about the issues which are there in this classroom, but the material is quite long. So this covers basically your material and your employee cost, this 32-page document, and this is yours, this is for you. I have prepared, and after the classroom or through the institute you can have this material and this stuff. And this is what I plan to do is that after I have come across these issues, so basically speaking, this one whole area of method. So you can, very sorry. So so this methods would be this is basically methods of costing. So this is methods of cost. Methods of cost accounting and methods of costing, and here also you can call this basically techniques of costing. So these two areas would be left out. Of course, if I'm rigorous about them, then each of them would be taking 1 or 2 sessions. So naturally that is not your, because you have 50 marks, and not only that, only MCQ type questions. So basically I have an eye on the question paper and your syllabus. So naturally it would be I would try to create things which are only for your perspective. So I'll try to curtail the issues and make them for. So this is a very as I said, it comes with the introduction. First of all, you will find that this CAS is cost accounting standard. So the CAS is cost accounting standard. So you are all unmuted, so anybody can ask me any question as and when I. So this first issues is what I have in my repertoire today. So it's 32-page, the initial material what I have. So first of all, you need to understand that what we are trying to do. You understand that we have already talked about the fact that material and labor, which we sometimes call employee cost, especially your cost accounting standard 7, it talks about, so this is cost accounting standard 7 and this is cost accounting standard 6. So these two are very important elements of your prime cost, and there are a lot of issues. For example, first of all, we take up material. Now one term would again come to you again and again: control. So whatever I have told you that this is a pre-mortem. So what you are doing is basically in anticipation what is going to happen. So basically, for example, if 2022 is you want to set a price in for 2022, so what you are doing is basically 2020 and 21, maybe 21. So all the estimation are on the basis of this, and you estimate for 21. So remember that all you need to do is you got to keep a check on the issue. So keep a check, because you cannot allow, you know that prices will go up, prices of material which you buy, keep a check. So you want to keep a check on what is happening with the situation. So naturally, you know that prices is going to go up, and you want to keep a control over. So you want to prevent. You want to correct. It's not preventive. So control is basically preventive. For example, when we go to sleep, we use a Mortein, a good night repellent. So that is basically prevent. You are preventing something. You are not correcting something. So for example, there's a mosquito bite and you do something, you use so you are control, you are in that case reduction. So that is corrective action. So this is not a corrective action. So the whole issue you will find of material is about correct control. You are controlling your costs. So basically, when we talk about your material, what I'm saying is what is there in this huge document. So first 15 minutes, maybe let me talk about what I am going to talk over in the next 40 minutes. So maybe first 10 minutes is just an introduction or a synopsis of the whole material chapter. So basically, it's about purchase. You want to purchase in a very efficient manner, so that there is no wastage, so that costs are less, and etc. So you want to make the purchase in a nice fashion. After the purchase is made, these comes and are stored. So it is stored in the storeroom. So you have stores, and finally you issue those products to the production department. So this all together create material control. So basically speaking, if you are looking about into your material chapter, we will be talking extensively about purchase, how we do the purchase, where from we do the purchase, and regarding purchase, the main issue we would have to talk about is whether we go for a centralized purchase procedure, or a decentralized purchase procedure, So basically speaking, process procedure. So when we talk about purchase, there are a lot of issues. There are a lot of documents and etc. For example, one big important document is your bill of material. So there are a number of people who are from the engineering department. You understand that if you are trying to manufacture something, we create a bill of material, which basically talks about all the materials that would be required to suit the design we have created. So basically, when we talk about purchase, we will be talking about the centralized and the decentralized purchase procedure, the advantages and the disadvantages of the centralized and decentralized purchase procedure. So, and another thing is how much. So, so where to purchase from? So where from we are going to purchase? Where from? So in that case, we are talking about the suppliers, the quotation, and the whole process of purchase. So you can just brush up these issues, and many of you are from the industry, so you know regarding your tenders and how to do it. You know 1,000 times better than I do as regards to this. So where from and what amount? So that is a very critical question. We are going to delve a little bit of more time because there are some issues to talk about. What amount do you want to purchase? For example, in a particular situation, maybe you are in require of 20,000 kgs of rice in a restaurant. So you require 20,000 kgs of rice in a month. So the point is, do you purchase 20,000 kg at one time? So you can purchase 20,000 kg in one time and then go on consuming, or you can purchase 1 kg at a time. So that means you have to go to the market 20,000 times. So here you have to go to the market 1 time, and here you have to go to the market 20,000 times. You have to go to the market. So naturally, what amount we will purchase, this is being we can go scientifically as regards to this. And stores and issue, well, stores and issue are not dealt differently. For example, in you maintain a very you maintain a continuous inventory system. Which is basically about your bin card and store ledger. So I'll tell you, don't worry, just 10 minutes I am spending on what is there. So it's basically you keep a check, continuous check. let us call this continuous check. So you are keeping a continuous check. How do you keep a continuous check? For example, in your house, in everybody's house, we consume rice. How do you keep a continuous check on the amount of rice that is being stored and maintained? So here we are basically talking about the bin card. So we have to talk about and the store ledger. I'll tell you what these are, because that is what this document is whole about. So stores is basically how much to control, and of course how to control. So basically, if you look at it, you will see that inventory control is so the purchase is done, the material is in your house, and now you want to do it. You have to maintain inventory control. So you can do inventory control in you can fix the right levels, the right level of purchase, how much to purchase, where from to purchase, the minimum level, the maximum level. So you fix the right level. So don't worry, please don't worry, because I'm going to, this is what I'm going to talk on for the coming 40 minutes. So don't worry about each of them. I'm going to help you with, because remember that I am going through the your study material and your question papers at the same time. So naturally, please, after you get the document, just compare with the document with the study note you have, and most of them would be cross-reference. You can cross-reference for that. And next is very simply, you do it with what do you call analysis of stock. So you analyze the stock. Here we do the ABC analysis, not the ABC costing, and we do the weight analysis, and we do the FSN analysis. So this is where we end the chapter. And there is also a question of ratios. So you have your ratios to deal with, and finally you have your physical stock verification. So unless until you physically verify your stock, physical verification, unless until you do a physical verification, the things would be not proper. So basically speaking, these are the 4 areas which we have to talk about. 1 and 2 we would be talking about, and 3 we would not be talking about, and 4 a little bit a theoretical portion. But remember that this lecture is important from the perspective that here you can listen to me. Things are clear now. You can listen to me well. There is a message that somebody is not able to. Okay, most probably everything is okay. Just let me know if things are not okay. So this chapter is important. important. Why? This is an important issue. Why? Because this is an important issue because, so somebody pinged me. Okay, fine. Somebody said I'm not. I'm thinking the problem is with him or her. So this is an important issue because this is also dealt in module 5, the last unit, inventory management. So you really come to know, because unless until you manage your inventory well, you can reduce your cost by managing the inventories well. So it's basically, so there we'll be talking about managing your inventories. So there we'll be talking about managing your inventory. But naturally, that comes, the basic of this is this chapter. And finally, you do this in details. I don't know how much details are there. I have seen a little bit of it, but not much. You can cover the UQ and etc. etc. So just once more, we are talking about, somebody might have joined in late, we are talking about material. There is a comprehensive 32-page document, covers material as well as labor, or employee cost, which we conventionally call labor. So this is a convention. This is a 32-page document which covers, which supplements much of these are taken from the study material, because I saw around 60-65 pages of small letters writing in your study note. So just keep a track of, keep your study note and keep this material. So I think things would be absolutely clear for you. So right now in A, we do material. So maybe 40 minutes we talk about the material. And in material, there are 3 issues we talk about: purchase, how you purchase. So there we talk about the centralized purchase procedure, decentralized purchase procedure. And then we do stores, where it is stored, how you store them, and then finally issue. So basically these 3 covers up your material control. So these 3 really covers up your material control. And as I have said, this is being extensively dealt in Cost Accounting Standard 6. Of course, you do not have to follow that. Just remember some of the names. So please refer to my first lecture, where I just gave some names. So just be careful about this. So an inventory control, you basically fix the levels, and you do some analysis about your stock. And ratios, we really do not talk about. Stock turnover ratio, we do not talk about right now. And there is also physical verification. So you verify your stock physically. So this is basically the thing which we are going to cover up in the coming session. Any questions, anybody? Any points you want to raise? Let me proceed. So much of this I'm just going to read. Why it is important? You understand that material is the most important portion of the total production process. For example, I'm very fond of fountain pens, and in fountain pens, what is there basically? You have some plastic, and you have a nib, and then you put in the ink and it writes basically. So, but lately, I'm not saying lately, maybe 10 years, 20 years, 30 years, the body of the fountain pen comes off not only plastic. So you have your acrylic and your ebonite and your resins. So the price varies from 400, 300 rupees to maybe 40,000, 60,000 rupees on the basis of the. So there is one question of urushi lacquer. So they paint that with the lacquer. So it's a most important issue, the price of a product. For example, a Mobla 149 is priced at 56,000 rupees. Naturally, the product, the pricing, the nib material, the quality of the nib, if it is made of gold or not. So a lot of issues comes which makes the thing. So you understand, for example, you would like to have today is Sunday, so you want to have a very nice lunch. Just think of the cost of the lunch, and most of the portion is the material which you are consuming. So naturally, it is a very important portion of the whole process, and therefore you require to properly record. There is of course a phenomenon why should we record? Because it is our things and we are consuming. But you just keep a record, and you exactly know how things are moving. And as I have said, what recording will do is that it will control things. Of course, control is preventive, and cost reduction is basically you are trying to do it permanently. But control is not that. You are not trying to reduce your costs. You are trying to keep a check on the thing. You just if you look at the product. For example, I remember I used to do the groceries 20 years from back, when I used to pay 160 rupees for the month, and today around 3,600 rupees is a monthly grocery. So did I do anything? No, I did not do anything. I just kept a measure of the things. And these are two reasons. One is the prices have gone up. One, a number of consumption may also go up. So basically, latter when we do variance analysis, so there is a variance. So it varies, your actual and your standard value. This variance is either due to the price or due to the usage. So this is going to be very important later. You will find, please be with me. So why it is important. It's also the price, your quality, your production should not be hampered. So it happens in your house, you ask somebody to have a cup of coffee, your guest, and then your mother or my wife says, no, coffee is not here, why did you call? So I just go out. This is a question of stock out. So you do not stock out has a cost. Stock out is where stock is not there. So how much of stock you should have? So if you have more, that is basically that will basically an investment in stock, because if you buy, for example, in my house I consume 200 kgs of rice in a month, our family, and if I buy 200 kgs of rice in a month, that amount would be involved right in the beginning. So if that is involved right at the beginning, it should be an investment in stock. So wastage is you should be able to curtail down wastage, and you should have information about it. But as I said, control, you are controlling things, and as I said, without interaction, you cannot interrupt your production process. And you cannot prevent excessive investment. So if you buy 200 kgs, you will be all dropped. So basically, this is what I talked about. Material comprises of three issues: purchase, stores, and issues. They go down to your material control. And importance of material control, it is very difficult to talk about everything. So if you just ping me or you unmute yourself and talk, I'm there to help you out. But as for otherwise, it's very important to have a check on your material. So optimization of material cost, minimization of interruption. You cannot interfere, you interrupt your production process. You have to reduce your wastage, and you have to do the thing in time. So this is actually this is important in the sense, in my first day class I did not talk about this, but I just felt like giving you a very close understanding about cost control and cost reduction, because you need to understand, because every time you'll be talking about cost control. Every time. So standard costing is about cost control, budgetary control is a control process. So all the techniques are cost control measures. And here also we are talking about inventory control, labor control. So what is control and what is cost reduction? So the main is, this is a preventive. You are trying to prevent it. You are using a mosquito net to get away from the mosquitoes, and this is corrective. So you are correcting the error that has happened. So cost control is temporary. You are just taking out, but permanent. This is more permanent. For example, the Six Sigma or the Kaizen costing. So you try to do something which will improve the whole situation for long. So you implement the issue. So be careful about this. Just this is for your own benefit, that I have included these issues for you. Let the thing remain. So you will have this this document, and I will let my notes remain. Functions of material called. So what we do, we purchase, we receive, we inspect the issues which we receive, we store them, and then we issue it. Now, where do we issue it? We issue to the production process. Remember, there was a stores room in your house. So when you purchase, or in your factories, so where you work, so the products comes to the stores room. So the product comes to the stores room. When you purchase them, it comes to the stores room, and from there it is issued to the production. So it is issued to the production process. So it is issued to the production department. So in my house also, I have a place where it is stored, and then it goes to the kitchen for production of the meal. So you issue them, and you have to maintain stock records. And finally, you need to have a very good audit system in place. So functions of the purchase department: right quality, right quantity, right price, right material. So you understand, these are very easy readings. You just read this and you understand. So these are the documents which so this is a purchase process. So the whole procedure which is followed is like this. Bill of material, I have said. So this is being prepared by the engineering department. How much of things you are is required. So actually, I think bill of material should have come upstairs, and then your purchase procedure starts. No, it's purchase procedure. Purchase requisition is coming next, of course. So how do you know how much of things you need to purchase? That will come from the bill of material. So these are, you will just go to the study notes and you will just see that these are there. But naturally, you have to read so much to get this, and not much MCQs come on this. So I think best way is just to listen to what I'm saying, or just go through my lecture afterwards. So methods of purchase. So this is from, I have intentionally mentioned the page number. This is going to help you. Methods of purchasing. As I have said, there are two ways of purchasing: the centralized purchase procedure and the decentralized purchase procedure. So basically, in a centralized purchase procedure, you have one purchase department. So all the departments are basically ordering the things to be bought to the purchase department. So you order them, and they give you, they wait for the things to accumulate, and then they buy the thing for all of you. So this is a centralized purchase procedure, and there is also a decentralized purchase procedure. So in a decentralized purchase procedure, every, for example, in my college, every department is given 2,000 rupees to buy some books, and so everybody is authorized to do some purchase. Every department. So there is no single purchase department. Of course, maybe there may be some for bulk purchases, as for otherwise you have smaller units, smaller departments. So everybody have a right to purchase something. So what happens in your house is similar kind of a thing. You need something, you go and buy. Your father needs something, goes and buys. So it's basically a decentralized purchase. There is also a centralized purchase procedure. There is also a centralized purchase procedure where everything. So it has the advantage of economies of scale. So you in study note 12, that the merits and demerits of the two systems are given. So you can refer to that. The purchase procedure covers these documents. So in your study material, you will find each of them is given with a particular format. So now we come to inventory control. Now with the purchase is done, the material is with us, it's come to us, and it is with us. So maybe 200 kgs of rice is with you, and now you need to maintain it. Now this will also, this has a linkage to purchase as well. Yes, tell me. Anybody has?
So in the purchase department is depicted by which organization structure? Like, is it a purchase organization?
No. I'm talking about a general. You do work in a company, no? Are you with a company?
Yes, correct.
Which one?
Racket.
Okay, Rekit. RECKITT. Am I sure? Am I right
Correct,
with
correct.
the spelling?
Yes,
Okay.
correct.
Okay. So what do they manufacture? What do they manufacture?
You can take a product Dettol.
Product Dettol. Okay, fine. Rekit and Coleman. You are talking about, no?
Yes, correct, correct.
Okay. So they produce Dettol. Now Dettol they are selling Dettol. They are selling Dettol. Now Dettol requires what are the composition? Do you know the composition of Dettol? What it requires? So
You can,
let us.
you
Yes,
can
tell
take
me.
anything. You can take anything.
Okay, I'll say A, B, and C. So basically, if you want to prepare Dettol, you want to have maybe 200 liters of A component, B component you require 10 units, and C component you require 200 grams. So these you are buying from outside. These you are buying from outside because you want to produce Dettol, which you are going to sell to outsiders. Now, how you are going to buy? How Rekit is going to buy? Do they have a centralized purchase? Most probably, because so they everybody. For example, there are X and Y and Z departments. So everybody, you have an engineering department. So they give requisite, send bill of material, and this bill of material consists of how you're going to manufacture Dettol, and this specifies the units they are going to buy. So these are taken down to your purchase department. This information goes, so this document all through, not verbally, all through these documents. So bill of material, engineering department gives to department XYZ then asks through purchase requisition, it goes to the centralized purchase. X says, I want 200 kgs of this, 300 kgs of that, etc., A, B, and C. And then you have a production department where this X, Y, and Z issues the products to these departments. So then the production departments manufactures and produces Dettol. Am I being able to answer your question?
Yes. So, on what organization level will it be? Like suppose
Uh,
there is purchase organization, right? There's an like
no,
how we like if there's a cost center where the costs are collected. Similarly, so how is that depicted? Like in case of purchasing department.
No, the purchase department is basically a cost center. Because they are going to they do not have any responsibility as regards to the revenue generation. So of course the purchase department are basically have to keep an eye on the amount purchased. Fine, that is at lower cost. So they are going to go through the tender process, etc. But they do not have a responsibility towards what you say, towards a revenue generation. Of course that would have to be dealt with the higher department. So I think I just personally feel that purchase department is basically a middle level situation, a middle level organization, middle level, because they do not have they are basically cost center. They do not I don't know, let's say concept, I'll say expense center. They are basically thinking of only payments and how you buy the goods. So they do not have to be responsible towards the revenue generation. Okay. Yeah, let me know. Tell me.
No, thank you.
Okay. So now that A, B, and C products are in the departments, So how much of each of them are in the department? So that is the main point, and that is all about inventory control. So basic line is this, two, you cannot overstock, because overstocking would require in more investments, unnecessary investments, and you have to avoid stock out. So basically you have to have a balance between this. So it's a trade-off. Inventory control is basically a trade-off between overstocking and stock out. So there would never be a situation where your production process is hampered due to there is less of stock. Number one, and in that case also it cannot be overstocking. Overstocking should be avoided. So this is a very important chart. Inventory control are basically, as I have said, about your quantitative level fixation, relative classification. This we don't do out here. And physical verification, you understand, is basically so it's basically stock audit or inventory control. Inspection, physical inspection. So there is a perspective of this called a perpetual inventory system, which is not physical. So in perpetual inventory system, what you do is that you maintain a bin card and a store ledger. So the bin card is maintained by the store department, and the store ledger and the store ledger is done by the cost accounting department. So what they do is that it's like in the house you have in the meter, where the electricity is being calculated in the meter downstairs. So you will find a yellow card where just the number of units. So somebody comes and on the month he writes the number of units. So that is a kind of a bin card. So that's a very good example of a bin card. So there just the number of units is being recorded. But in store ledger, which has happened in your in the bill that comes to you, it comes with the units and it comes with the amount. So basically you can tally, and this is how your perpetual inventory system goes. So you do not have to always go and verify. You just look at the yellow card. So while coming from my bazaar, I go and check out the yellow card and I see how much of units I have consumed, and I also see the bill which has come and I just tally them. So basically this is in place of physical verification. I do not do a physical verification. I basically do a perpetual inventory system. So I am just doing something, not by going into the details of the physical verification. So of course these are basically scientifically done. So these are not just like that. You cannot just say. I'll tell you one thing. So basically there are 6 levels of stock. Of course, very few sums come on this, so therefore naturally I do have some sums, and those are solved for you, so you can just also look at them. And so this is a chart. This is a basic model which we follow. For a stock replenishment and consumption. So you buy your stock, and replenish means buying stocks and consuming stock. So this is a basic model, and which is being absolutely followed. Of course, you have difficult models which are basically topics of operational research. But this is a basic thing. You buy this quantity of stock. So this quantity of stock comes into your house. For maybe if you just think of your house, you buy 200 kgs of rice, which is your monthly consumption. And then it starts diminishing because you consume rice every day, and it diminishes. And you find that your rice wala, the bazaar, takes 7 days to supply. So that is the lead time. So this is where you reorder. this is where you reorder it. And it starts diminishing. By the 7th day, your material comes. And then it again goes down up to 200 pages. And then again you start consuming. And then at a particular point with 7 days lead time, so this is basically reorder level. So here it's not 200. Let us go by the thing we have given. So this is reorder level, 2,400 bottles. So you require 3,400 bottles, and you reorder 2,400 bottles. So from here you can easily consume. If 7 days is a consumption, so 1,000 units is consumed, 1,000 bottles is consumed in 7 days. And this is the safety stock you have. That means the whole model is upstairs. So safety stock is a stock if something happens. So right now the thing is in your mind, if something goes wrong and you do not get your supply by 7 days, then what is going to happen? Well, what is going to happen is simply you're going to delve in the safety stock. But of course, this is a model, as you know from your usual academic days, that a model is based on assumptions, and many of which are only academic. So in actual circumstances, things are not this simple, and this model often falters, and therefore we have higher models in our operation management or operation research as well. So I have just given 4 formulas. Sometimes one or two marks have come on this formulas. Maximum, where how much is the maximum level? So if you look, just be careful about this. For this diagram, it's beautifully drawn, beautifully extracted from the internet, and the maximum level is given as the reorder level, and the reorder quantity. Now this is a dicey situation. How much this? So this is basically how much you should order. How much you should order. How much you should order. This is a dicey situation, and this is our ROQ, and this ROQ is, there is one ROQ which is the best, So for example, if the example which we are, so this is a minimum level ka formula, this is a safety stock level ka formula, and there are in ordering level ROL, there are 3 formulas, one of which is I could, if it was a graduation class, or if I had time, I could have I could have made you understand each of the formulas in details, but I'm just helping you out with your study notes. So that is the maximum thing I'm doing. Let me talk about a little ROQ, because that is the main point. Now, for example, in my house, I use 200 kgs of rice in a month. So the 2 maximum things that can I do, I can buy 200 kgs, spending rupees 50 per kg. So that is irrelevant, how much that is not required. So I have to go to the bazaar once. So I go to the bazaar once. Otherwise, this is one extreme, and the other extreme is I buy 1 kg. And in that case, I have to go to the bazaar 200 times. Now the choice is yours. How you are going to decide on what to do? 200 kg once or 1 kg 200 times. Of course, both of the situations are absolutely impractical. If you buy 200 kgs, if I buy 200 kgs, my wife would be very annoyed with me, because she cannot store that 200 kg in the house. So it is almost impossible. So in that case, I wouldn't have to go to the bazaar 200 times. So once would be okay. Otherwise, I can buy 1 kg. That is the consumption. Maybe in that case, I have to go to the market 200 times. Now all these. So this 200 kg is a Q, and this 1 kg is also a Q. But there is one Q which is the best, and that is the Q asterisk. And this is called EOQ, economic order quantity. So EOQ specifies a huge portion of the chapter. So this is your level fixation. I have done a sum for you, so don't. This is nice because you don't have to go and refer to your study notes. There are a number of examples given. It will confuse you, and none of which are going to come in the examination, for that matter. Only you got to just have an idea about the whole issue. So as I said, all these Q, you have various Qs, Q1, Q2, Q3. So all these Qs are basically how much you're going to buy, what is the quantity you are going to buy. And one perspective, one particular Q is the best. And what is that? EOQ, economic order quantity. Actually, this can be quite tricky. I have for your, these are the assumptions. So ordering cost is CZ. No, this. Very sorry, I have made an error. This is the material cost. This is the material cost. I'm very sorry for this. This is the material cost. So this is the ordering cost. This is C1 per order, C2, and there is no quantity discount, constant lead time. So these are the assumptions of the model, and I have helped you with the model, because what is the material cost, what is the labor ordering cost, what is the carrying cost. So just let me tell. For example, you buy 200 kgs of rice. So I use another pen. So maybe you are using 200 kgs of rice, and each kg of rice is 50 per kg. So C0 is material cost plus 200 kgs of rice, and maybe you are buying. So you are buying your Q asterisk is 50 kg. That means you go to the market 50. 50, you buy 50 kgs once, so you go to the market 4 times, multiplied. So you go to the market 4 times and multiplied by, for each time you go to the market, you spend 125 rupees. You spend 125 rupees, and Q by 2 is the average quantity. So 50 kg by 2 is the average quantity multiplied by your C2. Maybe it is 160. So this and this varies. These are not same. So C1, your total ordering cost is not equal to your total carrying cost. That means you are not buying at EOQ. You are not buying at EOQ. So at EOQ, your total ordering cost is equal to your total carrying cost. I'll tell you why. So this is a very important perspective. So it's a quite long definition. This is what I'm talking about. So if you go to the market less of times, your ordering. So this goes down. This is your ordering cost. So this goes down. Your ordering cost goes down, and this is your carrying cost. Carrying cost means stock holding cost. So your carrying cost goes up, and this is your average inventory. This is your total cost, and this is minimum at this point, and this is here that this is the Q asterisk, and therefore you apply your minima maxima to this. Forget about that. Not appropriate for this classroom. This is a good figure of what your annual cost is, and therefore I have forgotten to mention that. So your EOQ would be root over of twice dC1 by C2. So if you this is a function, and if you do maxima minima, because this is a minimum point, this is a minimum point, this is the function of this curve, total cost curve, this is a function of total cost curve, function of total cost curve. And so if you do max minima, if you apply your derivatives, then your Q or your Q asterisk would be or EOQ would be this formula, 2 is dC1 by C2. So I have this is a simple formula. So this, please refer to the sum, refer to this sum, and it's a very simple sum. Just apply the formula EOQ. So I had left space for solving the sum. So your EOQ is basically root over of 2 dC1 by C2. Okay. So I have to solve the sum for the solution is over here. Only point is that this is wrong. This is actually this is wrong. This is not going to come. The total cost would be so EOQ is coming to 600. And your total material cost is DC0. Total, there is some space. Total ordering cost, D by Q to C1, and total carrying cost, so Q by 2 to C2. So DC0 is your C0 is 20 per bicycle, and total in DC, look total this is DC0 20, 10,800 into 20. 10,800 is a total total 10,800 into 20. This is 900 and this is 900. So sum them up, and it is surely not going to be this, because I have wrongfully multiplied by 50. So I understand that these are very critical situations. For you who are just joining in, it is difficult for you to grasp these issues. But don't worry. Of course, you will have these lectures, and I have also to, so you can just refer to them as and when required. And I am there for you. I will be meeting with you on every Sunday, so you can just ping me, get to my classroom, and I will be answering them in details for you as and when required. So. Also, there is a question of price break, where the discount effects. So there was a question on this, so that is I had to include this. Otherwise, it's a little tricky for you. So what you actually do here is basically with discount and without discount. So again, as I said, your DC0 or D multiplied by C0, D by Q C1, and D by Q by 2 C2. So these are the two situations which will happen for you, and this is a particular situation where your C0 will change from point to point, and that is why. So you do the two costs. You take a cost out here, and you take a cost out here, and you compare, This is you can try it out, or maybe I will solve it for you. I had a plan of solving this, but it is already 11:55, so I need to take a break. And you have your perpetual inventory system, which I have said it was your bin card and your stored ledger happening. So you have your meter reading taken in that card, and you have a stored ledger, and so you can just read through this. Maybe the next day will come up. So these are the advantages of the perpetual inventory system. And there is also a periodical stock verification. So this is physical. This is physical. This is physical. So there is a question of physically verifying your stock. So you understand. So if you maintain a perpetual inventory system through store ledger and bin card, then basically you do not have to regularly take a physical stock verification, or stock audit is not that important. So this is a very important, it says about your bin card and store ledger, what are they, and you can watch this video about FIFO. Of course, these are evaluation systems. Just look into this, and I have taken just one sum from page 38 of your study note. And here the interesting thing is that the issue is at standard price. So it's a very interesting sum, which I just when I was flicking through your study note, I found out issues at standard, but purchase is at actual price. So there would be a price variance. There would be a difference of prices. And this is a sum. This is a stored ledger. You have receipts, issues. So it's like a passbook. Money comes in and money goes out, and you have a balance. So basically, you find that your closing stock is 1456, but the stock at standard price is 5 units is remaining, and it should be valued at standard price. So it should be valued at standard price. So naturally, there is a material price variance, or just a difference of prices of 246. A stands for adverse. A stands for adverse. So if you when we are going to go through those stock the variance analysis, it will be clear. And now we have a relative classification. Again, these are you just classify your stock according to importance. So ABC analysis are important wise classifications. For example, A category are stock which are high price. So its price is high, but its quantity is huge. So basically, for example, gold. For example, if you have if your production process requires gold, you cannot have much of gold. So its price is very high. But its quantity is less. So this is you are trying to classify your goods into various types. And then you have B category goods, which are maybe used, price is stagnant, and not stagnant, usual, not much, not less. And C category is huge quantity. For example, in your house, you require huge quantity of potato, so your quantity is huge, but your price is not that much. So you categorize your stock into A, B, and C. And finally, you have VED analysis, vital, essential, and defective. And you have FS analysis, fast moving, slow moving, and non-moving item. But I could not finish the topic without discussing just-in-time management. Just-in-time is it's just the opposite. You are ordering, you are keeping almost nil stock. So basically, your investment in stock is very less. This is on the assumption that your lead time is 0. That means the moment you call, instantaneously supply happens, the right material at the right time, at the right place, and the right exact amount. So you do not need to have any safety stock. So there is no safety stock. So there is no safety stock. So maybe this is late, means at least 30 years back this is developed, 20 years back this is developed. I'm very sorry for going this fast. I'm very sorry for this. I'm very sorry for this. But you understand that it is huge course, and I am just supplementing your study notes. Because if and furthermore, if you are coming from totally, oh no, do you want to say anything?
Yes,
Wow.
so I had a doubt with respect to, like, for GIT process, shouldn't there be safety stock to avoid, like there should be inventory, right? Like
Uh,
our aim is to reduce the in-process inventory associate carrying cost. Carrying cost can be reduced if we order less. So if you
no,
want to order less, we just require sufficient amount of inventory. So
no. Order less means the moment you order, it is instantaneously in your, now. Of course, as I said, academia would be a little different from the practical. For example, uh, uh, not at any place you can just order and the things will be coming. Of course, if you want to, if you are not, for example, in the Indian context, you are not very sure about your suppliers, so you need to keep a maybe 2 days safety stock. So this is a modified JIT, but JIT in the final understanding is something less. In the, basically speaking, you do not have any stock, simply speaking, because you just pick up your phone and it is in your house, in your go down right at this moment. So what you are saying may be modified JIT, just because of the fact that you do not have absolute faith on your suppliers. The suppliers might not supply you in a zero time basis. So they might take maybe 1 hour to supply. So you need to have 1 hour. Am I answering you? Anu?
just one doubt, like how does it reduce the carrying cost? Like if
Because,
they're because they're supplying.
I understand. I get your point. For example, if a carrying cost means stock holding cost, remember, in our understanding, carrying cost is stock holding cost. For example, I have told my maid to bring all the materials which she is going to require for cooking in the morning. So we do not have any kind of jars or any kind of we do not have to hold our rice in a plate, in a place, in a jar or anything, because she brings, cooks and forgets about it. She brings, cooks and forget about it. And that is why in JIT you have zero carrying cost, because carrying cost is not carrying the product. Carrying cost is stock holding cost. You are holding the stocks in your go down or in your store. There is no stores. There is no question of stores, because it is being used. It is being it's coming into your stores and being consumed. It is coming into your stores and being consumed. Am I being able to answer your question, Anu?
Yes, yes.
Okay. So I'm very sorry for this. I'm very sorry for this, my dear students, my dear gentlemen, because I was real fast. But as you know, I do not want to. I want to cover up a material level over it today. Otherwise, I want to go into your accounting the next day. So. Maybe I am here. I have a classroom. You can directly contact me through my classroom, or I will give you my mail. So I will surely this is my mail. You can contact me through my mail or my classroom. But I was real fast, and please pardon me for this, because I want to finish up labor and overhead today itself. It's 12:05. Before I start, let me answer one question, one perspective. That is very simple. Look, we generally do not differentiate between these three terms: price, cost, and rate in our general life, in our general day-to-day life. But basically, in academia, in our commerce, what we do is that when we talk about cost, we think exactly of the payments we make for a certain product. So for example, I have a phone in my hand, and this phone is worth 10,000 rupees. So that is the price of the product. So that is the price of the product. So basically, I do not know the cost of the product. Why? Because the seller has created opacity in this, because if I understand that maybe if, for example, if you understand that the cost of the product is 5,000, and you are spending giving 5,000 as profit, you will never buy that. So cost and price are basically two ends. The price is the final interface between the seller and the buyer, and the cost is the amount the seller pays to acquire the material and convert into a finished product. And the rate is the per unit. It is referred as the per unit. So the rate of material is a per unit. I think I have made you understand. So let me carry on with where I left. So I have to talk about employee cost. So I will not spend more time in talking about employee cost. Now, employee cost is covered in CAS 7, Cost Accounting Standard 7, and it is basically in all academia. It is known as labor. So it is labor. Again, the word control comes. So you basically have to think about how much you're going to pay to labor. So it is not only your how much you have paid. So how much you have paid is basically a topic of financial accounting. But how much you're going to pay is a topic of cost accounting. That is and this is a standard Cost Accounting 7. This is issued by our institute, our old institute, and there we talk about this. Now, what about labor? So why this chapter of labor? And I'm going to spend 20 minutes on this chapter, on this topic. Why? What about this? Now, the point is that the second, so after you know that material is your first issue. So in your product, for example, our pen. So I have a Click Renessa pen in my hand. So I have a Click Renessa pen. It's come out a fountain pen, which is priced at 2,300 rupees. Okay, fine. So the material of the pen, this I don't know. This is basically the cost of the product I have paid. So this is the price of this is the price I have paid. So this is the price I have paid for this fountain pen. So this is the price I have paid for the fountain pen, and the material which I don't know, maybe 800 rupees, because they have a acrylic body and the cover, the nib material, all the stainless steel nib, etc., etc. So maybe they have paid 800 rupees for this. And the labor, because somebody has these are these are hand tuned pen. Hand tuned means somebody has tuned them in the hand, so they have used a motor or whatever you call, you engineers know better, and they use this to tune out this pen. And maybe it's pretty expensive, because somebody has to sit for 2 days to make the pen, and he charges 700 rupees for that. So 1,500 is the prime cost of the pen. And after this, you have to charge overheads, which I intend to do today itself. If I am unable to, I'll just hand over the material and I'll just talk for 15-20 minutes on this. So these are, for example, there are 15 people who sit in a house which runs under air conditions, and you have to pay a monthly bill of 7,000, and you have to pay a rent of the property of 8,000. So this is a 15,000 you have to pay for these pens to manufacture. So you have to put that money at per unit. You have to charge that overhead, on each pen. And we do not use the term charge, we use the term absorb. Absorb. So you have to charge. For example, this is what I'm going to talk on the last half of the class. last 20 minutes of the class. Last 20 minutes of the class, I will talk about this. And for example, they charge, you absorb 450 rupees, and therefore 950 rupees is the cost of the pen. Is the cost of the pen, and he charges 350 rupees as profit, and therefore he has 2,300 as the selling price. And since this is per unit, you can also use the term rate. Since this is per unit, you can also use the term rate. So this is the cost structure, and we are right now talking over how, what, etc., etc. of this. So basically, we are talking about labor control. So we are talking about labor control. What basically there is huge amount of writing in your study material, but conceptually speaking, a smaller chapter. Remuneration. How much you pay to them? How much you pay to them? You pay some basic remuneration to them. You pay some basic remuneration to them, and also you pay a bonus to them because they do something good. Bonus. So or it's called incentive. So you pay them basic remuneration because of the work they have done, and you pay them bonus. You pay them bonus because of something good they have done. And this is about payment which you get. And you have to also think about some other issues. One is idle time. For example, I have asked a person to work on a furniture, and he is going to charge 420 rupees for that day. And if for his work from 10 in the evening, morning to 5 p.m. So he's going to work from 10 a.m. to 5 p.m. and he's going to charge 420 rupees. Naturally, you can reasonably expect that he's going to go to the toilet, and he's going to take a smoke break, and he's also going to take a lunch break, and he might also take a nap of maybe 15 minutes. So these 420 rupees you are paying, you are also paying, this is a productive time which he prepares your bed, and also some idle time. Now these idle time are normal. These are normal. But one day what happens is that he falls sick. At 3 p.m. he falls sick. And maybe he takes a break of 2 hours because he falls sick. He falls sick and he takes a break of 2 hours. Now this is abnormal idle time. And this portion, be careful in your study note because some questions have come on this, I found out. So this is abnormal idle time. And so you got to talk about your idle time, and this is what you talk about. And finally, you talk about your labor turnover. That is how many people are. So basically, turnover is coming in and going out. So you cannot be happy if labor turnover is high. So if labor turnover is high, that means something is wrong. You are firing people, or people are getting off, and something is. So basically, you want to keep labor turnover under check. You want to keep your labor turnover under check because that will reduce your cost. So these are the 3 issues we really talk about in our study note. In the material, which so there are a lot of issues in your study note, which is given by the institute. But I felt that these are the 3 issues which are of importance. Of course, I told you that it is all about direct labor, because indirect labor is considered as your overhead. So indirect labor is considered as your overhead. And as I said, control, we are always talking of control, and that is as economically as possible. So you have to be, just keep a check on your that, because you're paying for the labor, and every day in every house, your my wife or my mother instructs the maid to do this, to do that. Don't waste your time, do this. So this is basically you are keeping your labor control. So these are basically labor control process, and this is also you can relate this to your organizations as well. So you as a laborer are also you are also controlled as regards to how much time you are putting in, or you have to put in your application for leave, etc., etc. So the techniques of labor control, these are the techniques of labor control. And therefore you just ping me as regards to any questions, any query you have, and I'll be helping you with that. Now this is a very important definition, and what is a labor control, and look, the benefits are paid or payable. So this is remuneration, this is remuneration, and in all forms, for because somebody is working for you, including temporary, part-time, contract employees, so everybody. And this definition is given by CAS 7, Cost Accounting Standard 7, limited edition. So labor, this is from your study note. It covers mainly your HR department, the industrial engineering department, and your good old timekeeping and payroll department. So basically, this is dealt in the human resource management, in the academy of human resource management. This is dealt in the academia of operations management. Operations management. Or a little bit of this is also dealt in HRM. Also, you are dealing a little bit of it. But here we are going to deal in time booking and payroll. Time booking is, as I said, somebody comes in. You have to, when you enter your office, you put in your thumb impression, and that is basically a concept of time booking. You are booked, but of course you do not go to your department. You take a break, you have a cup of coffee. All these are idle nominal time, and these are not booked to the job. I have a very interesting one pager which talks about these in details. And finally, you have your payroll. And as I said, your labor turnover, how much people are coming in and going out, leaving your organization, and idle time. So these are overtime is automatically the other way, and also overtime is basically a part of your bonus, and payment by result is basically your efficiency. At this juncture, let me tell you about efficiency. How you calculate your efficiency in terms of percent. Sorry, I don't know why this efficiency. So actual output. So in terms of percentage, output, how much you are preparing by standard output, how much you are asked to do. So this is your percent, the efficiency when output. But when time is given, in terms of time, the opposite happens. Standard time by actual time. Just an example, you are asked to do 100 units. You have done 120 units. You have done good. So actual output, so you are more than 100% efficient, more than 100% efficient. So unit wise, this is the formula. But piece wise, time wise, the opposite happens. You are asked to work for 8 hours, and you have worked for 4 hours and done the same job. So you have done better. So 4 hours by 8 hours. So that is why when you talk about time, the opposite happens. Just a different thing happens. So when payment by result comes, the first thing that is required to understand is the efficiency. Is efficiency that happens. So timekeeping, you just keep time and you book your time. So no, for example, you enter your office at 10 a.m. and leaves at 5 p.m. But of that, you really get into your department at 10 a.m. and take a break of 20 minutes or have lunch hour of 20 minutes at 2 p.m. and for 20 minutes, and then you get out at 4:40. So this is basically time booked. So actual amount which is booked to the production process is about this perspective, and time taken is the whole issue of used. So methods are remuneration, either piece system or time system. Either you pay in piece or pie. So this is taken from a book. I failed to mention the name of the book. Sorry for that. I'll surely come up with it. So this is a time rate. This is not required really. No, this is not required. So how much you work? 8 hours you work, and how much you pay? 2 hours, 2 rupees per hour. So this is basically time rate. How much output you make? 200 pieces, and you are paid 2 pieces per rate. So this is, and the bonus is the bonus payment is, I forget about that. This is not required for you people. So maybe for undergraduate level this may be required, and or for paper 8. So you have your individual bonus plan, which is where you are mainly your study note talk about these 3 issues, and you have individual plan or the HALSE plan, and so this is the formulas given for HALSE plan. You have your basic remuneration, time taken into hourly rate. Bonus is 50% of time saved into hourly rate, 50% of time saved into hourly rate. So that is your guaranteed time wages. So this is basically this is time rate, hourly rate, and I have a sum on this is a sum on HALSE, and HALSE where the percentage changes. Some of the books uses a 30% rate. I don't know about your study note, but they use a 30% rate, but this is a standard used in other books. So 1/3 or 33% is the used rate HALSE where. So again, I have a sum. You can go through this. This is HALSE where system, and so you have a Ravan. In Ravan, the formula is this. So the bonus is time saved by time allowed in time taken into hourly rate. So these are very silly things, but still, since these are given in your study note, I'm referring to them. So this is a sum on your Ravan bonus plan. So this is a sum on your Ravan bonus plan. So you have a Raman plus. Now, as I said, this is from your study note. Paper 8 ka jo study note is given. This is from paper note. As I've said, you understand what is idle time. Idle time is basically the difference between the actual time that worker is working for you and the total time you are paying for the work. So maybe you are paying the difference between the time which the employees are paid for. Maybe so you are paying for 20 rupees for the work, and the time booked against the cost object. So for example, he's making a furniture and he has for this is for 7 hours. This is for 6 hours. So for 6 hours he's done this, but you find that he has actually worked for 5 hours. That means so the rate is basically 70 rupees per hour. So since he has worked for 5 hours, 5 7 35. So this is This is the amount of money which will be directly booked to the job. So basically, what the work that is being done, for example, a pen is being produced, it will be charged to the pen. Then what happens? It will not be charged. It will be charged, but it will be taken to a separate idle time account and would be taken as an overhead. So it is better to take them as an overhead. So it will be charged, but it will be charged differently to the product. So you will just sum them up and take it to a different account called a normal idle time account, and then from normal idle time, which is, so idle time is basically considered as an overhead, So there is a normal idle time, that is the time your worker has to go to the bathroom or take a coffee break. That is pretty sure. For example, 2 hours I've been talking, I need to have 5 minutes for a cup of coffee. So that is pretty sure. So that normal time. But remember, when the institute is paying me for the job, they are going to pay me for the 5 minutes. No, don't worry. But they have to keep a track. They have to keep a track of the 1 hour and 55 minutes I go on talking, 55 minutes I talk, and the 5 minutes I take a coffee break. They just, so as I said, control means they just keep a track of this. They just keep a track of this, because if they don't keep a track of this, they will not. So this they're going to directly charge to the class. So this is the direct remuneration. But this they're going to take it to the overheads, and from there they're going to take it to the account. So naturally they would be coming, but they have to keep a separate account of this. Otherwise, they cannot. Comparison is not possible. So normal idle time, such as waits. So this is normal idle time inherent to unavoidable annual. So this has to happen. So there can also be some waits. For example, when I was taking CAT classes and the classes are on Microsoft tools, Microsoft Teams, there was some trouble, and there was I sat idle time, not because of my failure. So you have to categorize the idle time, normal idle time, because of your failure and because of my failure. Sorry. There is also abnormal idle time. As I said, for example, one day maybe I fall sick and I cannot take a class. Maybe after 1 hour class or maybe 40 minutes class, I have to abandon the class. That has to be charged to the costing profits account. So this is a different kind of idle time. Considered idle time is not considered because it is inherent, it is embedded, and you have to. So the main point is that you should not let considered idle time remain in the situation. You have to discover that. So idle time should not be booked directly to jobs or production. So what you do, you keep a separate idle time card. That means you put all the costs separately and then take them to the operations. So you charge that. I'm not saying that you are not going to take it to the pen. That is the interface between the seller and you. So you have to take it to the pen, but you do it in a different fashion. So this is a treatment. Just go through this. As I have said, unabsorbed idle time, you have to take it to the cost accounts. It would be insignificant. So unavoidable. This is not abnormal. This is unavoidable. So this is allowed to remain. So because it's 5 minutes, I'm taking a coffee break. So they will allow it on the production. They're not going to separate it. But normal idle time is classified and allocated to separate standard order. So it is kept separate. And the abnormal idle time is taken to the costing profit account. So this is basically dealt separately. It is taken to the costing profit account separately. Look, it is dealt as separate. But that means it is charged, but it is charged as a loss. It is charged as a loss. So you cannot charge it to the product. You cannot charge it to the directly to the product, or you cannot charge it to the product through your overhead. You cannot do it. As I said, you cannot let until I'll time to remain like that. So it has to be discouraged. It has to be discouraged. And so just go through this, and finally you have your labor turnover. So labor turnover, there are a number of theories. So these are basically theoretical issues. So you have the causes of labor turnover, why labor turnover happens. For example, I remember many years back, there were two strong industrialists, Birla and Tata. There were two groups, and the labor turnover of Birla was pretty high in comparison to Tata. So it was a basic understanding that Tata kept its employees happy. So basically, whether you are keeping your employees happy or not. So if you keep your employees happy, they are not going to leave your organization. And if they don't leave your organization, you do not have to recruit new people. And all this process requires more cost. So that is labor turnover specifically speaking. And personnel causes, why labor turnover happens, unavoidable causes, avoidable causes. So you can just, these are simple issues. It's maybe pretty interesting for undergraduate students, but not for you. Just glance it and you understand the situation. Measurement. There are 4 methods of measurement. How you, because unless until we come up with a number, you cannot say low or high. So low and high is no matter. You have to come up with a number, and there are basically 4 methods. So number 1 is addition method. How many people are added to the situation? Addition method. Number 2 is separation method. How many people are going out, left your organization? How many people have left your organization? How many people are replaced? That means a part of your actions. For example, 3 people goes out, 5 people comes out. So basically 3 are replaced. So addition is 5. Separation is 3. I'll tell you once more. 3 people leaves the organization, 5 people come in the organization. So 3 people are going out. So 3 people are separation. 5 people are added, but replacement. How many you are replacing? So out of the 5, you have replaced 3. You have replaced 3 people. So that is replacement method. And finally is a flux method, where addition and replacement. So you have your, please refer to the formulas, and and I have a sum for you. So just go through the sum, and you have So according to in a particular organization, according to addition method, 14% is the labor turnover. According to separation method, 3.2% to 5% is a labor turnover. According to replacement method, 1.5% is a replacement, and according to flux method, 8.63% is the labor turnover. So basically, which method to follow? I think flux method is the most representation of the thing, but there are all these are all given by an academia, and therefore it depends from perspective to perspective. For example, if you want to show your organization good, you do the replacement method, which shows the minimum labor turnover. As for otherwise, 8.63 gives a very conservative approach. So basically, there's a question. Do we have any regulatory rules and guided formulas for value or values to consider when making labor employees cost? Yes, Ashok, yes, that is what I said. A regulatory method of guided formulas or values to consider labor cost. Yes, labor cost is basically, of course, I'll tell you once more, these are part of the academia which were developed pretty back. So basically, Taylor's methods, these are this has been there for 50 years time. So there have been tremendous change in the actual scenario, which are yet to be incorporated in the academia. But conceptually speaking, the time rate is the most advantageous method which you find. But remember, these are all related to the factory. These are not related to the office, where you mainly are paid on the basis of our hours. But conceptually, the idle time and the labor turnover, these are issues which are very predominant in understanding, which is required in every juncture. Some may be using it, some may not be using it. So again, I'm very sorry, because I'm again going very fast, but I do not have the leisure, the option of dealing with these issues, because number one is that you are all advanced students. And this is a different type of a course. This is an absolutely different type of course, where you really do not have to work out the sums. You do not have to work out the sums. That is why I had to change my materials, and I tried to solve the sums for you, because you really don't have to you do not have to work out the sum. Some of those sums you have to work out, and then I will tell you. I will be specific with those chapters. For example, marginal and standard, I will be specific with those. And contract, I have I on the study note as well as a question paper. There have been 2 questions, so in 2019, 2020. So don't worry, I have an eye on the study note and the question papers. So I am slowly modifying my notes to those, so that we can be able to answer them. And in the meantime, I couldn't create the Google Forms, so the Google Forms will reach you, and you can answer the questions. So the last 15 minutes, let me talk about overheads. And this I want to do because the next Sunday I want to talk on part B, that is accounting. So that will give you another perspective. So that is why I want to talk on, I want to finish up overheads. So let me present another material. So don't worry, this material I will also hand over to you after the classroom. I'll make some changes, and I'll share this document. So material and overhead is another chapter gone. So I will surely come up with doubt clearing sessions where you just ask me questions, or you message me questions and I answer your questions. So overhead, I have done 3 very interesting sums to you. In trying to give you overall perspectives. So what we are talking about, I talked about the previous time also. So basically material, yes, we know material. If you think of the example we considered about the pen, yes, we know the material. The labor, yes, we know the labor or the employee expenses and the direct expenses. So these are the 3 things we knew, and this came up with the prime cost. So this is prime cost, but there are some indirect cost, which we call overhead. So for example, I'll just take one example: rent of 5,000. If you take that simple example of the tea shop, so he pays 5,000 in the month. These 5,000 have to be absorbed to a product, because he has to fix the sale price of ₹5 per cup. He has fixed a sale price of 5 per cup on the basis of these actual costs and the overheads which have to be absorbed to a particular product. So this is where we are overheads. So the last 15 minutes I have done 3 very interesting sums on overheads, and that was on the 30th of the previous Sunday, where I solved 3 sums. Made you understand that maybe you can add this. If you look at these 2 sums together, you have a pretty good idea of the whole thing. Or maybe I will just give me some time. I will just add that material to this, and I will make a comprehensive material on overhead. So basically, I have just So in introduction, I have said what an overhead is. But remember that what we are doing absorption costing. So you have basically throughout till you reach um, here and here, you are doing absorption costing. So forget about 11 and 14. As for all other issues, we are doing absorption costing. And I said overhead is the most critical issues about in the subject, because it is question of putting that putting that indirect amount into the product cost. So you put that particular amount, which may be fixed in nature, but if it is fixed in nature, because if it is variable in nature, you can easily take it to the product. So basically, you have cost can be either period, for a particular period, and it can be for a particular product. So if it is a particular product, there is no trouble. But if it is trouble, if it is for a particular period. So if it's for a particular period, you have to take it to the, so you have a cost which is fixed in nature, and you have a product price. So how you take this to this? You remember the three sums we did? We had to allocate. Then we apportioned. We calculated the absorption rates. And that had to be used, applied those rates into the product price. So what we did, we summed up. So we summed up. We added up all the costs. So therefore, that is why you have so much theory in this chapter, because it's all about adding up the cost. You have to identify the cost. You have to add. So you have to first identify the cost, and then add up the cost. So you identify the cost and add up the cost. So you identify the cost and add up the cost, and then after identifying the cost and adding up the cost, you allocate the cost, you apportion the cost, and then you, after apportioning, you calculate the absorption rate, and then you apply the absorption rate. So you apply the apportion, apply those rates to calculate the product price. So this material, which is again a 12-page material, so long enough, comprises of that. What is an overhead? Material, indirect labor, fixed nature. But basically they are of fixed nature, because that is a trouble. Because if overhead is of variable nature, can be, of course, if it is of variable nature, then it can be directly, easily taken to product cost, product price. So because you add cost. So if overhead is variable natured, you can easily take it to the product cost. No problem. But if it is fixed nature, then trouble comes up. So if it is fixed nature, then trouble comes up. So if it can be variable nature, but we are not concerned with our variable production overhead, because those are directly taken to the products. So how you do this? You do this through analysis of overhead. So you analyze the costs and finally take it to each cost center. After taking it to the cost center, you will take it to the cost units through the process of allocation, and apportionment. Allocation and apportionment. So how you allocate your cost? So just read through the theories, small theories. So these are the production departments. So cost centers. And very interestingly, there can be a cost center which we call overhead cost center. For example, rent, we do not, yes, that has to be shared, but right in the beginning, we might directly put into an overhead cost center. So I have a sum, how you allocate the overhead. So there are three departments, A, B, and rent. So this is a overhead department. So this is, we'll do it later, kind of a thing. So there are supervisor's salary, wages, you allocate, wages of supervisor. So of department A. So you allocate. So the moment you understand where to take it, you allocate. So rent of premises you are unable to. So therefore you take rent to a separate department. It's called overhead department. Overhead department or what? Overhead cost center. So you take it to overhead cost center. Or which you would have to apportion, Surely you would have to apportion this finally to the departments, because these products would be sold in the market. So you have to apportion this. So this is a cost. So the rent of factory would have to be shared, means apportion, on some prerequisite basis. And next is how you so look, second step in absorption costing. I told you in the beginning, except for chapters 11 and 14, we are basically doing absorption costing. 14 for that matter is also absorption costing in a different fashion, activity based. So we calculate cost drivers. That is a very interesting scenario. So you apportion, you get an idea about apportionment. So the stages of apportionment. So there are two stages. Primary apportionment is called primary distribution, where you take it to all the departments, including the service departments. So you also have the service department. For example, a canteen. So this is the basis of apportionment. How you apportion these expenses on the basis. So you calculate the ratios for apportionment. I have taken a sum from your study notes, and this is the two service department. So when you calculate this, so the trouble is, look, this is the overheads given. So these are the overheads given, and these are the overheads, and these are the basis of. These are the basis. So these would be required for the basis of apportionment. These are the production departments, and these two are the service departments. So naturally, these costs, so I'll tell you, this cost has to be taken to the production department, which will be covered in the secondary distribution. So here's a solution, and look, our total overhead is 31, and this is on the basis of various issues. Rent on area square feet is the basis, repair, etc., etc. So you understand on the basis of apportionment. And production department 1 gets this much, production department 2 get this much, and production department 3 get this much. And what about these two? These are some, for example, canteen or computers, repair. So these are the two departments which give services to P1, P2, P3. So these costs have to be taken to these departments, and that we do through our secondary distribution. So we take this cost to departments through our secondary distribution. And S1, let S1 be canteen, and S2B service, computer repair. So 2910 and 1610 have to be reloaded. So we'll have to be loaded. I will call it reloaded to P1, P2, P3 departments. And this can be the basis of service secondary distribution. So these are the basis how we, this gives service to the production departments. They give service to the production department. And these are the basis which are given in our study material. But basically speaking, these are the two methods. One is a direct and the other is a repeated distribution. I have two examples. One direct distribution, where it's given how the service department serves the other department. It's given from your book. So how the service department gives services to other departments, P1, P2, and P3 is given. How service department 2 gives service to other departments given. So you add, and that is how the service department costs distributions are attributed to the production departments on some predetermined basis. And there is also a repeated distribution. I have an example from your book. It's most probably problem 2, and I have taken 5. Why after 5 I have used? Why? Because if you look, this is direct, and these, all of them are repeated, are what you call a repeated distribution. That means S1 gets S2, S2 gets S3, S1. So they contra. For example, a repairman of the computer department may come and have lunch in the canteen department. So again, you have to, and I have taken the most difficult of them, that is a simultaneous equation method, and I solved the sum. I had an idea of solving the sum, and this is how so service department X, the cost is 700. Service department cost is, you segregate 899 out of service department X. Why? Because you create a simultaneous equation. Look, department X gives 10% service to Y and receives 20% Y service. So basically, how much of X would you actually clear? 700, this much. This is given plus 20% from Y. And Y, so this is capital. Let us, I'll do one thing. You call this A. Now let us. Y is equal to 900. Most part. Let me check out. Yes, 900 plus 10% from X. So this is a simultaneous equation you have to solve, and thereby X will come as 898 because something is added to 700, and Y will come to 990. And you distribute those figures into this 990 and this, and you get the total of this. So this is this, and finally absorption. You take this to the products. Now what you do, you take this to the products. How you do? You can do this. There are 6 methods. We do not generally use this, but this was sum number 1. If you refer to the previous day's material, this was the simple most case of sum number 1. This is where we use sum number 2 and 3. So of previous day. And machine hour rate, percentage of direct material, percentage of direct labor, percentage of prime cost. But of course, again, I'm being a little too very fast about these issues. Please, sorry for this, but this is how you calculate the percentages and you charge them to the products. So you take them to the products. I have another example where we take them to the products. data relating to job or material, labor, and labor hours is given. So labor cost and labor hours is given, and 2000 your particular job, in a particular job 2300 is the budgeted labor hour, a budgeted cost, and 1000 is the labor hour. So the absorption rate, the labor hour rate is 2300 by 1000. So that is 2.30 per unit, per hour. No, 1000 units. 2000 with per hour. So this is labor hour. This is cost. So per hour. And how much? 90 hours given. 90 hours it is consuming. So direct material 367, material, prime cost, and overhead cost is 207. So this is our labor hour rate. So if you go back to our previous sum, look, total overhead is 62,100. So in all the cases, 62,100 is the numerator. So in all the cases, 60 to 100 is the numerator, and the denominator, I'll show you the percentage of direct material. 60 to 100 by direct material. How much of direct material do you consume? Production output material is 49,680. So 49,680 into 100. So this is the direct part. This is percentage of direct material. Direct labor hour rate, 60 to 100 by labor hour. Machine at 27,000 hours by 27,000 hours. So this is the direct labor hour rate. Rate per unit, so 13,800 units. So 13,800 units. Machine hour rate 34,500. 62,000 by 34,500. 500. So you get machine hour. Percentage of prime cost. In prime cost, you understand you have to add up 60 to 100 by 49,600 is the material cost. 680 is the material cost plus labor cost. Labor cost is 17,250. 17,250. So percentage prime cost. And this is again 60 to 100 by 17,250. So here, these are the ways you calculate your percentage of absorption, and then you absorb them on the basis of this. So with this material, please read the previous day's material, and I'm again once more very sorry for being so fast with what I'm talking on. But naturally, as I said the first day, my material which I have prepared for you is surely going to help you with your studies, because it's a 50-50 talk. I will just run over the material which I prepared. So naturally, I'm very sorry for this, but as I have said, I'm going to distribute the materials right after the classroom. Just give me a few minutes before I distribute the classroom. I will get through the institute as well, and also you are free to ask me questions at any juncture. You can also message me the questions. But the next day, I will come up with part B, that is accounting. So thank you very much for your time, and maybe hopefully I was helpful too. So any question do you want to raise? Please feel free to raise any questions, or otherwise I will quit. I understand that, but you will have these videos. You can refer to them when you study. But I'm just trying to brush up the you. So basically, consider my things as a brush up to the materials which you already have. So I think if you just flip over the materials which you have, I think that will help to you. So with this, I would say quit. Thank you very much for your patience here.